Hello everyone, my name is Priya Yadav. So, in this presentation, I'll be explaining the operational process followed by microfinance institution under the individual lending model. So, what microfinance plays a very important role in promoting financial inclusion by providing credit facilities to individuals who are generally excluded from the traditional banking system. So, today I'll be walking you through how MFIs identify borrowers, assess the creditworthiness, verify the documents, and finally approve and disburse the loans under the individual lending mechanism. So we'll be seeing the overview of operational process of MFI individual lending here. And moving to the next slide, where we will be learning about the meaning here. So we'll learn here meaning of MFI lending. So Microfinance institutions, like commonly known as MFIs, are in financial institutions that provide small ticket loans and other financial services to low-income individuals who may not have access to formal banking channels. So, under the individual lending model, what loans are provided to individuals based on their personal creditworthiness and business performance rather than relying on group guarantees. So this model is particularly useful for borrowers who are capable of managing loans independently and have a stable source of income through small businesses or self-employment activities. So, in the individual lending approach, the loan decision is based on the borrower's repayment capacity, business stability, and financial discipline. Unlike the group lending model, where joint liability exists among members, individual lending focuses on evaluating the applicant's personal financial condition. This makes the assessment process more detailed, and MFIs must carefully analyze the borrower's income patterns and business performance and repayment history before sanctioning the loan. Also, we should look after the target beneficiaries because under this model typically include micro entrepreneurs, small traders, and self-employed individuals. These individuals must often run small-scale businesses such as retail shops, tailoring units, food stalls, or service-based enterprises. So access to microfinance loans enable them to expand their business operations, manage working capital requirements, and improve the overall income generating capacity. So this is the overall meaning of MFI individual lending. So we'll move to the next slide where we'll talk about the operational process overview. So the individual lending process in MFIs follows a structure sequence to ensure proper credit assessment and minimizing lending risk. The process begins with small client identification, followed by credit assessment. Next, then borrower's documents are collected and verified. Finally, based on the evaluation, the loan is approved and disbursed. So this systematic approach ensures that only credit-worthy borrowers receive financial assistance, thereby reducing the chances of loan default. So we will be this was the overview of the operational process, how it works. This is a sequence and it is validated before funds are released. So moving to the next slide, I will talk about step by step. There are total 4 steps. So I will be talking here in this slide about the step one, which is client identifications. So the first step in operational process is identifying potential borrowers. These may include group borrowers who have demonstrated strong repayment behavior, as well as new applicants such as micro entrepreneurs and small traders. During this stage, the institution evaluates factors such as business experience, repayment capacity, and the borrower's ability to utilize the loan effectively for a productive purpose. So here we'll identify the client in short. So in step 2, we'll check the credit assessment of an individual who will be taking the loan. So this second steps involve assessing the borrower's credit worthiness. So what MFIs evaluate the applicant's cash flow patterns, business stability, and repayment capacity to determine their financial strength. They also review any existing financial obligation to ensure that the borrower is not over leveraged. So this will help. This assessment is usually conducted through field visits, personal interviews, and inspection of the borrower's business activities to gain a realistic understanding of income generation and also financial behavior here. So we need to verify and cross check also. So moving to towards document verification, this is the third step where once the credit assessment is completed, the next step is documentation and verifications. So borrower required to submit KYC documents, address proof along with income related details. So the institution then verifies the documents through background checks and reference back verifications to confirm the authenticity of the applicant's information. So this will help the borrower to smoothly process. So coming to the last step, here we talk about like after successful verification, the loan is approved based on the borrower's creditworthiness, business income, and overall risk profile. Upon approval, the loan amount is disbursed to the borrower through bank transfer or digital payment methods. So this ensures transparency in fund transfer and also enables borrower to utilize the loan amount of their intended business process.